This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth. And today we got a fantastic show talking about things that nobody talks about. Not billion-dollar problems, but billion-dollar investments. And the most important part about that is what are the biggest items that they purchase? Sports teams. I'm going to do a deep dive into sports team and discuss the in and outs of how much they're worth, the type of income they're bringing in, and if it's an actual good investment. I'll take a look at three major team or leagues, which is the NBA, the NFL, and the MLB. And we'll talk about the most expensive team, the cheapest team, the biggest losers, and the biggest winners. And it's huge, so you can understand what's a good investment. I'll also take a step back and give you a background of that, where I go dig deep into a little bit of stock so you understand valuations there, along with the local mom and pop store. So stick around as it's a fantastic show today that it relates to everybody at a fantastic time of the year when sports teams are up and running. Good day. Lots to talk about today, folks. Today, I thought it would be a fun time of the year to go over with NBA around the corner, MLB in the full, I guess, thick of things. And now you got the NFL rocking and rolling. Now, listen, this show is only about 30 minutes, and I am not excluding the MLS or the Premier League or our good old NHL. But I thought, let's go over the sports teams. And more importantly, to see if it would ever make sense for you to buy a sports team. Does it make sense financially based on these valuations for somebody like yourself where you should invest in a sports team? These are core characteristics that, of course, there's a vanity piece to own a sports team. There really is. Who the heck wouldn't want to own the Lakers? Unless you're from Boston. But the idea is what? It's cool to own one. And you see and hear all these billionaires buying these teams. So, what I'm going to talk about here in a little bit is the three different leagues, and more importantly, if financially it makes sense. Is it better to own the Yankees or versus the Atlanta Hawks? You get what I'm saying? So it depends based on the financials. This is what most people don't understand. So stick around for that in a little bit. But first, we're going to take a step back. Let's understand the financials of how things work. I'll give you an example for the stock market. We all can relate to that. You look at price to book or price to earnings ratios. That's so important. Where you look at the price of a company, let's just say it's $3 billion, excuse me, I'm so 1990s, $3 trillion valuation. That could be the Googles, the Amazons, the whatevers of the world. $3 trillion valuation, and they're trading at 20-time multiples. What does that mean? It means maybe they're netting $60 billion a year. So this is how things work. It's a 20x multiple on that. Now, these have very high growth trajectories depending on these companies that you invest in. This is how it's looked at. Some companies are 30x, 100x, 1,000x. Why? Because they have so much growth in the future. Some of them have a negative. Why? Because they're not making money yet. Some of them are losing money. Forget not making, they're losing millions and billions of dollars. Huh. So why would you want to invest in that? Because of the future potential of their growth. Hey, Apple is an amazing investment if you bought it in 2000. But guess what? Were you stupid enough to buy Apple in 2000? Only an idiot would have bought that company on the brink of bankruptcy. They were losing billions. Only a moron would have invested in them. But $100,000 would be worth about 30 million. You get what I'm saying? So it all depends on what the future expectation is. Now, we all understand sports. Some would say it's even recession proof. But let's focus and open up the hood. So we understand how stocks work, right? Typically, it's a 20x multiple, and it could go higher from that. Maybe you're lucky you get a 10x multiple, right? Who wouldn't want to buy a company for $1 billion that makes you 100 million a year? That's a 10% return on your money. That's fantastic. You get what I'm saying? So cheap stocks, which Warren Buffett likes, is a no-brainer. It makes a lot of sense. So that's how it works. Now, here's the thing. That's like these big national companies that everybody knows. The Johnson and Johnsons, the Procter and Gambles of the world. But let's look at your local coffee shop. Those typically trade at 1 to maybe 3x. What does that mean? Well, if they make, let's just say, 50,000 a year, you could probably buy that coffee shop for 50 to 100 to maybe 150,000 a year. Yes, Those are fantastic investments. That's why I've said multiple times on these shows, the Shaquille O'Neals, the Peyton Mannings, the Magic Johnsons of the world, they are buying these franchises. They are buying businesses, and they own not one or two or five or 10, but hundreds of these businesses because it's a no-brainer. Yeah. So you start have to thinking to yourself is, could I do that? Well, I don't know. They have a team of what, 10 to 20 people, probably pay them all six figures to run these hundreds of stores. So it may be a little hard for us. When you and I want to buy the local Cold Stone Creamery, guess what? We have to go fly out to Scottsdale, Arizona for 1 to 2 weeks to learn their franchising model. So is that really something we're going to want to do? Probably not. Right? These were very popular in the early 2000s with Subway franchises and so on. So, what are we talking about here? The valuation of a company. It's a great idea if you have the time for it, where you have a store that's producing $50 to $100,000 a year, and you only had to buy it for maybe $50 to $200,000 one time. Break even is 1 to 2 years. So, yes, it could be a no brainer to do that until you have to work the cash register when somebody calls in sick. So, now let's go to the sports teams. This is where it gets really, really interesting. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today I wanted to focus just on these sports teams. I hear it all the time. Heck, we had a sports fund that was out recently, and it was really open to limited partners. Heck, this is a pretty cool thing that as a limited partner, you actually get preferred dividends and interest. These are really cool. They don't happen all the time. Just so happened this fund ended up being part of the group that, oh, by the way, bought the Lakers. So it's cool, right? That people who are participating could say to people, hey, I own 0.0004% of the Lakers. So, and that's the reality of it. And heck, you have Madison Square Garden and you have the New York Knicks. These are publicly traded where you can actually participate and actually forget spending 250,000 minimum investment. You could buy a fractional share for $1 if you really wanted to through Robinhood. So, if you want vanity, do it that way, right? But if you're truly looking as an investment, now, by the way, if you are a multi-billionaire considering this, I sure hope you have a financial team behind you that's helping you get these answers for you. But just in case you're a multi-billionaire listening to More Knowledge, More Wealth, please know your host, Gabriel Shahin, would love to help you. Feel free to call me. But if you want that analysis of what it actually looks like, let's dig deep because I'm going to talk about the top three, and then we're going to rank every single sports team to tell you what actually makes the most sense when we come back here in the second segment. But let's start off with our favorite topic here and our favorite time of the season, and that is baseball. And when you look at the most valuable team out there, the New York Yankees, man, they got Aaron Judge. They're in New York. Look at the history, the legacy, the Babe Ruth, the Low Garrett, all the 20s and 30s of multiple World Series championships. Fantastic. Who doesn't love that story? They are worth a whopping $8.2 billion. My goodness, the Steinbretters. God bless them. Now, check this out. They're worth $8.2 billion. If you own them last year, you know how much you made? You lost $57 million. Bravo, Yankee fans. Sorry, I had to. I like the Yankees actually, even though Dodgers are my team, of course. But say, hey, who doesn't love the legacy of the New York, the NY, the cool thing on the hat, right? But they lost $57 million. Think about that. If you own the team, if you were the owner, if your last name just so happened to be Steinbrenner, you would have lost $57 million last year. Wow. That's like loser status. Sorry. In more than one way. Uh-oh, that's a great transition for our Dodgers here in LA. They're worth $6.8 billion. Interesting. Interesting thing about the Dodgers is, they don't even own the full real estate rights. They still don't own the parking and a few other things. But let's focus on the Dodgers. $6.8 billion would have only netted them an operating income of $21 million. Holy Moses. How long would you have to be in business to get your money back? Like 300 years. Think about that. $21 million Times 10 is 210 million. Times 100 is 2.1 billion. Well, you still have to multiply that by 3 to get to 6.8 billion in over 300 years, assuming they don't make any more money. Also, Dodgers worth 6.8 billion, terrible investment. Assuming I was a multi-billionaire and they said, Gabriel, I want to sell you the Dodgers, I would say, hell no. That is one of the worst investments in the history of the world. No, thank you. You see what I'm saying, guys? All this talk about sports teams, everything is based on numbers and if it makes sense. And does that make sense? Absolutely not. But now let's talk about the NBA, the National Basketball Association. You look at the most valuable team there. The most valuable team is the Golden State Warriors over in San Francisco. They're worth $9.4 billion. Would you rather have the Yankees or would you rather have the uh, good old Golden State Warriors? Some would say they would rather have the Yankees, but check this out: Golden State Warriors is worth 9.4 billion. More, that's a lot of money. Now check this out: they net 155 million dollars a year. Not bad, actually. If you think about it, if you multiply 155 million by 10, right, that is 1.5 billion. So really, if you look at it, it's actually not terrible, but it's still, you have to work, what, 80, 90 years to get your principal back? Not the best investment. Let's focus on the good old NFL. As we're in the season here, you got America's team, everybody, the Dallas Cowboys. The Dallas Cowboys is the most valuable sports franchise in America, arguably the world, worth $13 billion. Here's the thing: I think that's cheap. I think it's wild that it's only worth $13 billion. If I had $13 billion, I'll say, you know what, Jerry, I'm not going to give you $13 billion. I'm going to give you 14 billion. Just a little tip because you're such an awesome guy with so much common sense running your team. Why would I do that? Because it nets $629 billion a year. I would get paid back in 20 years, not 300 years like the Dodgers or infinity years for the Yankees because all they seem to do is lose money. This is insane. The Dallas Cowboys is actually a phenomenal franchise valued so beautifully. This is why it's important to understand finance. And just because you're a billionaire doesn't mean you should go around be buying a bunch of sports teams. Because as I gave examples, if you offered me the Yankees today, I would say no, thank you. Not even for $1 million, because I can't afford to lose 50 million. I'm going to talk a lot more about these three sports: uh, football, basketball, and baseball. When we come back after a few words, because I'm going to talk about what the best investments are and rank every single one of them to tell you what the values are and what they actually net when we come back after a few words. This is Gabriel Shahin, certified financial planner and president of Falcon Wealth Planning. We wanted to offer you a free financial assessment for listening to the show so you can help relate it to your specific situation. We offer multiple services such as retirement planning, where you are today, how retirement looks like, talking about Social Security, real estate, planning, even if you own a business, talking about taxes, not just how to save money today, but also throughout retirement. Talk about investments, making sure you're avoiding those high fees, costs, commissions, and also estate planning and insurance, just making sure you're properly protected if, God forbid, something were to happen. And we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Give us a call. We would love to help. Our phone number is 855 963 2526. That's 855 96 Falcon, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, and fill out the form fill right there on our site. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every week. And we're talking about all important topics of personal finance. And what's nothing more important than personal finance than talking about a bunch of billionaires and their sports teams? Yeah, not very relatable. I do agree. But when you really look at it, it's fun, right? Why do we watch these things? It's entertaining. So let's have fun today. So we talked about the first part of the segment, talked about the sports teams, and I talked about some of the top teams in each league, which was the NFL, NBA, and the MLB. So I thought let's have some fun with it. I was talking about the value of some of these teams and some of them that are worth billions of billions and billions of dollars that, oh, by the way, are losing tens of millions of dollars a year. So if you were the owner of the New York Yankees, guess what? You would, in fact, lose $57 million last year. That is what you call pretty pitiful. So now my goal of owning the Yankees ever really isn't a goal. I really would care less to do that because I'm not in the business to lose money. You understand? So let's have fun. Let's look at some of these. I'm going to start off with my cell phone and let's look at the NBA. So we talked about the Golden State Warriors bringing in $155 million a year at a $9.4 billion valuation. Now, this was the most expensive valuation before until the Lakers that went for 10 billion dollars. The $10 billion valuation is based on where historically it was figured to be worth $7 billion because they bring in almost $200 million a year. That's not bad, 200 million a year. But then again, if you collect $200 million a year over 50 years, you get to your $10 billion. That's a 2% rate of return. So, Genie Bus, no thank you. I do not want to buy the Lakers. I appreciate you offering though. Now, the New York Knicks is a bit interesting, valued at $7.5 billion. They bring in about 780 178 million. So yet again, almost $200 million. So I'm going to go down the list because all these have roughly the same variables here. They're going from 5.8 billion for the Bulls, netting about 118 million. They all net about the same. But guess what? The Boston Celtics, I'm going to highlight just a few. They're valued at what? About $6 billion. They recently sold not long ago. They only net 17 million a year. What a crappy investment. Sorry, guys. Yet again, Boston, you lose. So here's now speaking of Boston, right? They don't like LA. Well, it's hard to not like the Lakers, right? Who doesn't like a bunch of winners? But let's look at a bunch of whiners with the LA Clippers. Check this out. 5.4 billion valuation. By the way, Steve Ballmer bought him for $2 billion. Now it's 5.4, not a bad return. But then you start looking and they lost $114 million last year. I'm curious how much of that is due to the stadium they built. But man, imagine losing $114 million. That sucks. Let's continue this fun conversation. My Phoenix Suns, Matashiba owns them. He does just fine for himself. But guess what? You have him who bought the team for about $4 billion not so long ago. Guess how much he made last year? Zero. Broke even. Phoenix Suns. Sorry, hate to hear it, but that is the reality. Let's look at some other honorable mentions. You have the Milwaukee Bucks with Giannis, worth $4.1 billion. And guess how much they made last year? Negative 14 million. Man, imagine owning a sports team and losing that type of money. That, yet again, sucks. When you look at the cheapest team, now, if you really just, Gabriel, I hear what you're saying. I don't care what you're saying. I really want to own an NBA team. That's just my goal in life. Well, there are two tied for the cheapest, really one. Number one cheapest is Memphis Grizzlies at $3.2 billion, and the Minnesota Timberwolves freezing up there in Minneapolis at 3.25 billion. Now, one of them nets 70 million a year. That's the Wolves, and the other nets 46 million a year. Any way you slice it, folks, you're going to be waiting 50 to 100 years to get your money back. So you're earning a 1 to 2% return on your money. I don't know about you, but I don't need to be hearing about these diva and prima donna athletes. I'd rather collect my interest on a CD. Just saying. That is the NBA. And this is terrible. Am I going to be banned from games going forward? I mean, hey, listen, I love sports. That's why I'm doing this whole bit. But you have to think as an investor. If you want to do something for vanity, do it. If you can afford it, who am I to say you shouldn't? But this is something that you have to analyze for yourself. Because as I see here, it makes no sense in the world. Let's look at now the MLB. We talked about the Yankees worth 8.2 billion, losing 57 million a year. We talked about the Dodgers that's worth 6.8, netting 21 million a year. Check this out: Red Sox making 120 million dollars a year, valued at 4.8 billion dollars. Not too bad, but you know what is the worst team? The Mets. Now I know what you're saying. Everybody knows it's like the JV team of New York, but get this: they're worth $3.2 billion and they lost a whopping $200 $268 million. That is humiliating. Oh my God. Their owner, Stephen Cohen, which I know has all the money in the world, terrible, terrible, terrible. Just because you can afford it doesn't mean you should. And losing on a consistent basis is humiliating. I'm going to say it again. Lost $268 million. Oh my God. Let's continue here. You got the Atlanta Braves worth $3 billion and only nets operating loss of $3 million a year. They lose money. You have the Phillies, 3.1 million, only makes 9 million. You'll get it by maybe your money back by the next millennium. That's a rate of return of probably 0.01%. You got everybody's favorite cheating team, the Houston Astros, lost $11 million at a $2.8 billion valuation. I'm having fun here. Probably hate people hating me across the country. I apologize, but we're just having fun. The Washington Nationals, $2.1 billion. They make no money. I was just reading. Don't get mad at me for that one. So let's continue here. You got the Padres, 1.95 billion, making 32 million. Let's see if anything else stands out here. You got my Diamondbacks. I lived 23 years over there. They worth 1.6 billion, but they lose $33 million a year. So no thanks. I will not be ever buying the Diamondbacks. And then you have the Colorado Rockies losing 22 million. So it actually is pretty affordable if you wanted to buy a baseball team, the Miami Marlins, worth $1 billion. And oh, by the way, they do make $38 million a year. So yet again, that means you'll be getting your money back in only 30 years. Not bad. That's a 3% rate of return. It's sure as hell a lot better than the Yankees. So there you have it. Miami Marlins is a better investment than the New York Yankees. Folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend. We're talking about all important topics of personal finance. And today I thought let's just have some fun. Let's talk about sports. Tis the season. Did not have enough time to talk about everybody's favorite NHL, MLS, Premier League, and all these other sports that are out there that are up and coming. Flag football is becoming big, but I just thought, let's have some fun with the big ones. So we talked about America's team, the Dallas Cowboys, our winner, making a whopping $629 million a year at a $13 billion valuation. That's about a 20x. You will get your money back in 20 years. That's a 5% return. Bravo to America's team. They are amazing. I'm not sure about their team, but their valuation as an organization, say what you want about Jerry Jones, but boy knows how to make money. Then you have the Rams worth 10.5 billion. They also make 244 million. I mean, the NFL is insane. They are absolutely crushing it. Yet again, bravo. Even the Patriots, $9 billion, they net 222 million. Now put that into perspective. You have the Dallas Cowboys, right? Only worth probably about 40% more, but nets 3 times more money. You get what I'm saying? You net 3 times more, but it's only worth 40% more. That's what I'm saying. The Cowboys is legit. Let's continue to find. You got the $8.2 billion worth for the Bears, seventh highest in the league. Operating income, 80 million. Womp, womp, womp. Not very attractive. Everybody else is over hundreds of million, so on and so forth. Miami Dolphins, 7.5 billion, worth 63, or brings in 63 million. Everybody else brings in over 100 for the most part. So these NFL owners are making bank. Hey, Falcon Wealth Planning has a special relationship with one team in the NFL. It's the Atlanta Falcons. Hmm? No? Maybe. So worth $6.35 billion and they net only 37 million. Not too good, unfortunately. Continuing the conversation, nothing really here jumps out. As I'm scrolling down the list, you have the Carolina Panthers worth 5.7 billion, only makes 36 million, so not too good. Detroit Lions, sad oh sad, they net only $21 million operating income, I should say, 21 million worth 5.4 billion. But the cheapest team for you, if you wanted to buy, this wouldn't be my recommendation, is the Cincinnati Bengals, worth $5.25 billion, the cheapest team in the NFL, 5.25 billion, and they net 50 million a year. Now get this, the New Orleans Saints, if you just spend an extra $50 million, you get an extra 65 million a year. What does that mean? Well, the Cincinnati Bengals nets only 50 million, and the New Orleans Saints nets 115 million. Crazy, huh? How this works. This is why it's so important to understand finance because what seems cool, what seems fancy, whether it's going shopping, whether it's buying a car, whether it's buying a house, let alone a multi-billion-dollar sports team, it's so crucial to understand finance because who wouldn't want to own the Yankees until you realize if you own 1%, you're going to have to take out $570,000 and give it back to the team because you lost money. This is the reality of numbers, finance, and our favorite sports teams. Folks, that was a fast show.